Joining us now is one of the top strategists on the street, Fundstrat managing partner, head of research, not the drummer, Tom Lee. Tom, it's great to have you back on. That weighting thing, this is not new necessarily, but it keeps growing. That bowling ball on top of a pencil, as I've called it, continues to get larger and heavier. Is it a reason at all for Tom Lee to be worried?
Brian, it's not. I think one thing the viewers have to keep in mind is the world is short of workers, right? There's a global labor shortage, and there's demand for AI and automation, and it's these 7 companies, or the 8 or 9, that are providing these solutions. So their market cap's growing not just because the U.S. economy is growing; they're really solving global problems. So I don't think that is necessarily a bad thing. It's showing you how important technologies become. U.S. tech companies.
Yeah, maybe, and Nvidia. Okay, I mean, I think now we're contractually obligated to mention Nvidia at least 4 times an hour. I'm kidding, sort of, Tom. Nvidia, basically the same size now as Amazon. It's part of that group that we talk about so much. Is it a mania? Is it deserved? You just mentioned AI, but I mean, we've gone from $150 to $700 in less than 2 years.
I mean, it's pretty astounding to see the ascent, but we also know in the last 2 years there's been a lot of transformation, and I think really critical mass reached for AI. So to us, it doesn't seem like a bubble. There's real demand there. We're going to find out next week, obviously. But if there is a shortage of workers, we know that over time we have to replace salaried workers with silicon, and that could be several trillion a year of demand. So I think it's too early to say it's a bubble.
How big of a deal, if at all, maybe it's not, is tomorrow's consumer inflation data at 8:30 in the morning?
Well, it's very important because we know the Fed has only 2 inflation reports before the March meeting. It's this report and the one next month. And so I think, the bond market's certainly going to react. I do think the bond market's been anticipating kind of a hot CPI reading tomorrow. So I think if it's a worse than expected report, I think the stock market could be nervous short term. But, given how sentiment is and flows have been finally turning positive for stocks, I think it would be short-lived weakness.
Yeah, pretty amazing. You're not expecting a March cut, though, are you, Tom? It's May.
That's right. I mean, I'd say the market's been pushing out the timing of cuts towards May. I think one of the sort of sticky points in the CPI report has been auto insurance, and as that lingers, that makes the Fed nervous about whether or not we're getting towards 2%. But I do think the odds of a March cut are better than the 15% that are priced into the futures markets.
Yeah, Tom, I want to switch gears to Bitcoin. It's been a big couple of days, really, for Bitcoin. I'm sure you watched the Super Bowl last night. I don't know if you caught this. I did, and then I paused, and I took a picture of my screen, and I tweeted that out. CBS showing Jay-Z and Beyonce, because, of course, everybody knows Jay-Z and Beyonce. But look at that. Many people may not have noticed the guy they were hanging out with, the dude with the beard on the right to the viewer's right. Of course, Jack Dorsey, founder of Twitter, now runs financial firm Block. He's wearing a Satoshi Nakamoto sweater. Satoshi Nakamoto said to be the inventor of Bitcoin, which hit 50,000 for the first time in more than 2 years. Why am I bringing this up? Just a gratuitous Beyonce check. But hey, what a run in Bitcoin. What's changed just the last 2 or 3 weeks, Tom?
Well, we know that the ability to buy Bitcoin has changed a lot, Brian, with the launch of the ETFs, and there are multiple ETFs, and it makes it easier now for people who have traditional brokerage accounts to buy Bitcoin. I think it's a wonderful development because it is really allowing people to finally have exposure without having to necessarily store their own private keys, and I think it was great to see that sort of subtle reference at the Super Bowl.
So just to recap what Mr. Tom Lee said, he is not worried about a bubble, guys. There is massive demand for AI. He said the Magnificent Seven are the ones solving the problem, and that's why they're the ones with the biggest market share, gaining it the fastest. That's why everything is overweight in the Max 7, because they're the ones that are solving the problems with AI. That's where all the money has to go to keep investing in AI. He said we have a global labor shortage right now, so that gives room for more productivity when we get these workers into new jobs. He said Nvidia, with it even going from 100 to 700, is still not a bubble. He said they have massive demand, unlike anything they've seen, and they still think it's fairly valued. He said if there's bad news from the CPI report, which there was this morning, it should be short-lived. He's not expecting it to be long. He thinks the markets are already priced in some bad news for the CPI, a possible rate cut in March. So I don't know what the markets are pricing in. They're pushing it back a little bit. Tom Lee's not against it. He said he's higher. He's giving it more than a 15% chance. If you didn't know, Bitcoin ETFs got approved, and they are having massive inflows, guys. Massive inflows, pushing Bitcoin way, way, way to the moon. It's over $50,000 a coin or a share, whatever you want to call it. Anyway, that wraps up this video, guys. Tom Lee, the great investor, he's not worried about a bubble. I'm not worried about a bubble. I'm full risk on, and I think we're going to have a golden decade, guys. But you do what you will with it, and I'll catch you in the next one.